Hello friends, welcome to my channel and thanks for watching the video. Friends, today we are going to talk about the US Treasury 2-year bond yield. Uh, what we have seen till date, it means if you are talking about past 1 month of story, so the bond price are literally moving like some equity share price. So we have never seen such kind of moves previously, because if you have seen these kind of moves, it would probably take a few months or years of time. If you have seen these things, you'll see that the bond yield has crashed down by 83%, and it had taken 1127 days. And the next time it happened, it's like it crashed down by 96%, and it has taken around 1500 odd days. So, but this time, if you have seen the kind of fall, it had crushed around 87% within a span of only 487 days. So, these kind of movements are not common, neither it is good for the market by any means. But keep things aside, if you're talking about the US market, you have to analyze and do some research on individual basis, because one thing, some people are saying that the market is overbought and there is a 12 years of bull run after 2008. But if you check out other indicators which suggest that the Fed or the central banks, or even the central banks of the US as well as the global economy, what they're trying to do is creating enough liquidity so that the market becomes buoyant, and beyond a certain limit it won't fall. So they are trying to support the supply side, but the problem is actually the demand side, because different kind of situations which are prevailing right now in the global market, they kept on making the market very volatile. And the kind of moves you're seeing in equity as well as in other kind of things like currencies, commodities, bonds, they are literally moving like an equity instrument. So keep things aside, we are going to talk about the movement of US Treasury, and what should be the probable support level for US government bonds of 2 years. So if you just make a trend line like this, you will see that the technical analysis works pretty well here, and you will find this is the resistance level, and the market have proven it very clearly that after beyond a certain point some things do work. So you just see that there are three lower tops, and this is the previous low which has made in 2011. If you see 2011 and 2013, which is zero point 0.2. So if you just seen, this is the monthly chart. So if you just seen, it has touched the low of 0.38 and currently it is 0.46. It doesn't matter because the kind of fall, so these kind of moves generally won't matter much. But the concern point is, if I just make the support line, it is much beyond. If it has to, if the technical analysis is indeed right, so it will probably go to near zero, and this is a very big fall. If you just see that the kind of fall it has shown, and if this channel has to go down, and there is a probability that it will definitely go down much below than the previous one, because there are situations or there are indicators which are saying that the low is not yet known. Because what is happening, that with these kind of measures and to support the economy, global banks across the world, they will pump in liquidity, and they will keep the rate as zero as possible. And where if you can see in some of the countries like Japan or in European countries, they are literally running at negative yields or negative growth rates. So this is a situation where they will pump in money, they will support the economy from the monetary side, and obviously you will see that government across the world, they will loosen up the policy so that there will be a consumption coming back into the market, which obviously take time, and which we have to look, and which we have to observe. So this is the situation right now. The situation is indeed very precarious, and none of the economy want the global economy to fall back into the recession. That's why they are doing such kind of things. But you can see that probably the equity market is indirect to bonds or yields. If the yields go down, obviously the equity market will go up, and that is the common thing which we have learned from the history. And keeping that thing in mind right now, or in this cycle, we can probably say that even though there are indications that equity market becomes volatile and they are moving like haywire, a 10 to 15% of correction in the developed market is not common as per as per the global standard. If it is indeed happening in a developing market, that is fine, but if it is happening in developed market, that is not common. So keeping things aside, you and looking at the current analysis of the trend, you will see that this time this why. And another thing, that why I have selected this 2 year yield rather than 10 or 30 yield, because the movement is very sharp for this tenure. That's why I have, and the short term moves will show the uncertainty, because yields will move very fast if the near term cycle or near term period is uncertain or volatile. You will see the kind of moves and the kind of volatility both on the up as well as on the downside. So for yield, it will definitely go down. And if there are central banks who are indeed interested and pumping liquidity, so these kind of moves will happen, and you will see there is a crash in US dollars as well, for which I have already made a video. So what I am seeing right now in this chart, that the downfall or the downside of the support for this tenure is very low right now. It is indeed near to zero, and which does not look good as far as the chart is concerned. So this what I'm a short video on US Treasury yield, which I think that it is important to share with all of you. And with this information, I want to finish this video, and I hope that you have learned something from it, and you find the content interesting. So with that hope, I want to just finish up the video. So if you like my video, please like, share and subscribe my channel, and do write your thoughts in the comment section. And lastly, take care of your family and friends.